Hi again, this is Market Mum and welcome to another trading tutorial. Now in this trading tutorial what we're going to look at is how to calculate margin. It's a question I get asked often, how to calculate margin when you are selling options or writing options. As you know, margin is something that can fluctuate up and down, and what it is actually is what is required by the ACH, the Australian Clearing House, to sort of as a deposit or like a form of goodwill that you are prepared to buy or sell these options, or sell these shares that the option relates to, and you can do that if you get exercised. So it's sort of like their little guarantee that they take off you. Anyway, so let's get into it. You go to the ASX site again, which is www.asx.com.au. To this left-hand navigation over here where we were before, down to Education and Resources, go down to Calculators, and click on that, and here are the options calculators here, and go to Margin Estimator. It's here. Now all this is saying to me is that I was in here before, and if I go to continue, I'll lose the information I had before, which is fine. It's no big deal. Okay, so the theoretical price calculator is actually here as well. So, but we are going to look at the margin estimator this time. Now, as in the theoretical price calculator, you need to select the underlying security, which will do BHP just for simplicity again, and we'll choose the same strike, which was 45. It was a $45 put for July. Just keep going a bit further. Okay, so here it is here, and then we press go. Now it basically gives you the same information before as the option does. So I mean, I suppose you could use this if you wanted to find out your margin as well. You're probably better off to do your go to the margin calculator instead of just the theoretical calculator, because it actually gives you that that price. As you can see, this has actually moved a bit since we did it before, but because the actual price has moved up quite a lot. Now, okay, so this is the option that you're looking at. Now, here's the margin table. Now this is the theoretical, this is like how, to what degree the margin will move up and down relative to which way the price goes. So being that it's a put, if the price, this is around where the price is at the moment, if the price rises, the put value diminishes, which is why these are minus. This is saying that margin is being given back to you or taken away from the ACH. If the price falls, this is the money you're going to have to come up with. Okay, so but this will work it out exactly. Well, no, it's not exactly. So just remember to know that it's not going to be exact, and it can't be exact because your broker might have a different deal. They might take their little bit as well. So it just gives you. It's just more of a guide than anything. So this is the theoretical total value of the number of option contracts. So what you can do here is actually put in how many contracts you'd like, and it will work out the margin that you'll need for those. So say if I change this up here to 5 and went recalculate. So effectively I'm wanting at the moment to sell 5 BHPCQ puts at a $45 strike price. And that would roundabout be the price that I'd be getting for it per contract. And this is the amount of margin I'm going to have to come up with. So at the moment, if I'm selling this, because this is like a naked, these are naked puts, if I'm selling these naked, this is the price. Immediately I'm up for this $10,629 margin. That will come out immediately. Now as the price moves up, less and less is going to be needed, as you can see. As the price drops and moves down, more and more is going to be needed. So is that fairly straightforward as to how that works out? It should be. If you read more about how margins work, it will give you a bit more of an idea as to how the ACH uses things and how it calculates the margin. But this is a great little tool to use just to get an idea, just to make sure you've got that money there so you can satisfy the ACH requirements and that of your broker. But like I said, your broker may require more. Sometimes some brokers require the full amount to make sure you can pay for those shares if you have to. I wouldn't think that would be a very good broker, but you know, especially this day and age of defaulting loans and things like that, you know, they just want to cover their butts, so to speak. So you know, they may require more, but this is really what the ACH requires. So there you go. So I hope that's been informative for you. Stay tuned for some more video tutorials or trading tutorials. And like I said, after this video tutorial is finished, it's going to take you straight to my site where you can fill in a contact form, so you can let me know what other things you'd like to know about. What other trading tutorials would you like me to provide for you? I'm sure, I mean, all the ones that I've done so far are based on my subscribers' askings and requests and things like that. So you know, I'd really appreciate it. You know, if you want to know more, and I'm really, you know, would like to give you more. So fill in that contact form and let me know what you'd like to see. That's all for now. I'll see you next time. Thanks.